Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news. The Bloomberg Businessweek podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
We do start in Washington. The Supreme Court unanimously upholding a law that threatens to shut down the wildly popular TikTok social media platform in the United States. That could happen as soon as Sunday. That ruling that free speech rights must yield to concerns that Chinese control of the app creating a national security risk. High Court saying earlier today Congress well-supported concerns about the Chinese data collection justified a law that singled out TikTok. The measure requires ByteDance to sell the American version of the video sharing app by January 19th or, Tim, face a ban.
The decision opens an uncertain chapter for TikTok and its 170 million U.S. users, and it puts President-elect Donald Trump at the center of it all. With more on this highly anticipated and expected decision, with us is Bloomberg Technology co-host Caroline Hyde here in New York. Caroline, does this mean it actually could be the end for TikTok if President Trump doesn't jump in at the last minute to save it?
Precisely. This is about executive orders. This is about whether or not Trump does indeed become the person that now holds the ball in the court. Look, we were anticipating this from the Supreme Court, as we had just said. We anticipated that they'd say national security trumps here. But there are still many roles in place. What will Trump do? Look, we've already heard from Shou-Chew, the CEO of TikTok, who, by the way, is going to be at the inauguration. And he's saying, thank you, Trump. Thank you for saying that you are going to step in. The question is, does an executive order trump a congressional law that Oracle, that Apple, that Google have to stand by about allowing the app to be available on the app stores, but also the infrastructure that supplies it to us? Remember, Oracle is the one that chooses whether to host it. Will it go dark on Sunday, or will we therefore just not be able to roll the videos as we're used to? Or could TikTok itself say, sorry, we're putting up a little post-it note that you can't activate us on Sunday, really antagonizing those 170 million users?
You know, there's so much going on around this still, I feel like, Caroline. President-elect Donald Trump, of course, president come Monday, says he discussed TikTok with President Xi of China. You do wonder what are some of the conversations. I mean, this is why, like in our teas, we're like, Supreme Court banned TikTok in the United States, but is that the end? I do feel like, are there still some possible doors that are open for TikTok in the U.S.?
So right. Because it could be bought. Remember, all of this is dependent on a ban or a divestiture. So could we have Frank McCourt Jr., who we were talking about last week, coming and riding to the rescue, being able to buy the overall TikTok, but not its underlying algorithm? He's got a bid on the table. Also, there's China, the government itself, potentially thinking Elon Musk might be a rather nice holder of the asset if indeed they were forced to be selling. It would be a good chip on the bargaining table with Trump going forward, but that takes the decision-making entirely out of ByteDance's and TikTok hands. Also, we've got to take into place who are the investors in ByteDance. Some of them are American. We're thinking General Atlantic. You're thinking Susquehanna with Jeffrey Yass, who happens to be a big political donor to Trump here. You're also hearing of plenty other VCs who told me privately that they don't think that China is going to allow this to happen without taking some serious action on, say, like an Apple. This is the pinup. This is finally a consumer company going big in the United States. They're not just going to roll over. This is either going to be a key bargaining chip for the Chinese government, or indeed you'll see that ByteDance will decide to divest of it. There are so many moving parts here. But for me, as a user of the app, I just want to know on Sunday whether I'm going to be able to log in or not.
Totally here. Hey, by the way, Frank McCourt, I know who you guys have talked to in regards to he being part of a group that is interested in TikTok. We have too. He's going to actually be on our air in the 3 o'clock hour. So he'll be on Bloomberg. So looking forward to see what he has to say at this point.
Caroline, you mentioned Elon Musk potentially as one of the suitors here. That also brings up the idea that the president-elect has changed his mind quite a bit over the last few years on his view when it comes to TikTok. How do you explain this change of heart?
That it helped him win an election from his perspective. A warm place in his heart is how he calls it for TikTok. But also, as I mentioned, some key donors who happen to be investors in ByteDance, the parent company of TikTok, maybe whispering a few things in his ear. But I actually want to call that out because, Tim, I think it's such a good point. This is a total 180 for an awful lot of lawmakers, either side of the aisle. We just had Chuck Schumer, of course, minority leader of the Senate, saying he really wants to see a US buyer of TikTok. He's actually, according to the New York Times, said to Biden, This is about your legacy if you allow this to go dark on Sunday. This was bipartisan in nature, and all of a sudden, the game of chicken becomes very real. TikTok says it might just go black, and everyone's suddenly incredibly worried.
Hey, Caroline, for someone who knows the ins and outs of the broader technology landscape globally, this ruling, and depending on how it plays out, what does it mean for global technology, where we've been in an environment in a lot of ways we can kind of easily access? And I just wonder what this could mean down the road.
Well, if we cast our mind back to 2020, India did this. This isn't the first time TikTok's been banned. India ousted TikTok, ByteDance, and also plenty of other Chinese-owned apps. And they did it, and they flipped a switch, and it went dark on the day that it was banned. So this is the first time we've seen a big global player ban a Chinese company. But I do think more broadly, this is going to have a lot of intense relationships on what it means for Tim Cook and Apple and the progress that we make there. Of course, Elon Musk with Tesla in China, NVIDIA as it continues to want to sell worldwide. This is a question of US and China, but it's also, as you say, a question of social media ultimately being global. Also, the other thing to keep in play here is the US accounts for about 12% of TikTok's overall revenue, advertising revenue. It's much bigger in Indonesia in terms of size of population using it. It's actually making more revenue perhaps in other parts of the world. Maybe it can afford, as one VC said to me, to just say, thanks but no thanks, we'll make up for that in growth. We'll see you. And let this be an almighty cataclysmic game of geopolitics here on out.
That's a pretty intriguing idea, and I think would surprise many Americans who are used to sort of being the big player in the room when it comes to having leverage here. And I think that's pretty intriguing, Caroline. You mentioned other companies in relation to this. You mentioned Apple, you mentioned NVIDIA, what happens there with Chinese relations. What about what happens with companies that are competitors to TikTok, like a Meta Platforms, for example, with Instagram Reels? The stock reaction today, not so clear. It was down earlier, now it's higher. Was this priced in?
It feels as though everyone thought the SCOTUS Supreme Court would go this particular direction. I was surprised that Snap was actually lower on the day. But this has got to be disastrous news for one Mark Zuckerberg. He must have been really thrilled at the idea that most of the revenue from advertising would be flowing into Instagram Reels, a key competitor. It wouldn't have been bad news for YouTube, the ultimate owner being Alphabet, and indeed Snap. So it does mean that the competitive landscape remains fierce. Also, what I think perhaps has shocked them, Tim and Carol, is the fact that people flew to Chinese-owned apps. They didn't just suddenly pour over into Instagram. A lot of them already probably have Instagram. But they're also going on to RedNote, as it's known, another Chinese-owned app. We've seen, of course, Lemonade being one of the most downloaded. That's also owned by ByteDance. But also, there's an interesting Texan-based company that's done relatively well, Clapper. We just had the chief of operations on as well. And they've seen a real uptick in users.
All right. Great stuff, as always. Have a great weekend. Bloomberg Technology co-host Caroline Hyde joining us here in New York City.
You're listening to the Bloomberg Business Week podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
So California politicians are rushing, as we talked about earlier, to make it easier for residents to rebuild their homes incinerated in the LA firestorms. That means waiving green construction mandates designed to combat climate change, which is driving such conflagrations by making conditions hotter and drier, as well as suspending environmental reviews and promising to expedite permits. We just talked about this, Tim.
We got lots of angles on the fires. Still burning, by the way. The upcoming Sunday edition of the Bloomberg CFO Briefing newsletter explores the impact of the LA fires and climate change on the insurance industry. Discussing that will be a Bloomberg News senior editor Nina Trentman. And also joining us, we've got Edmund Reese, the chief financial officer of the risk and insurance management company Aon, both here in studio with us. You can find the Bloomberg CFO Briefing newsletter at bloomberg.com/CFO-briefing.
All right, guys. So first of all, welcome. Nice to have you both in studio. Edmund, I want to ask with you, you guys are a brokerage firm. You match the insurers with insurance clients. So I can only imagine what if your phone has been ringing off the hook in the last week or so. What are the conversations that you are having, both with maybe the insurance side as well as client side, since the LA wildfires?
Yeah, thank you. First, thank you for having
me,
Carol. I'm excited to be here. I'm receiving an update every morning from our leaders who are talking to both our clients and the insurers. Our clients are normally the corporations, and I'll say our clients on the other side are insurers as well as other capital providers, because there are other investors in this market as well. It is no doubt, we all have family and friends who have been impacted by the California wildfires. There's no doubt that this is likely going to be the highest loss wildfire since the 2018 Camp Fire in California. Right now, the latest estimates I saw today internally was somewhere between $22 to $40 billion in loss associated with this. Some other estimates are as high as $50 billion here. So what we are helping our clients and our partners with, after taking care of our colleagues and associates, is helping them determine what that loss is, what they have in terms of insurance coverage associated with that loss, so they can get on this road to rebuilding there in California.
Do most of them have enough insurance, or a lot underinsured?
Well, you know that first, there's this huge mega trend of climate wildfires as a part of it. And in these particular geographies, California and Florida, I would say those markets have been difficult insurance markets, where some providers have actually been pulling out because they can't price for the cost of this insurance. And so I think this is going to be a challenge. You're going to see that the insurance first, globally, in the U.S., there's a higher percentage of losses that are covered by insurance, but globally, about 30% of economic losses are covered by insurance. So there's a lot to be insured. What Aon does is look to bring capital providers in, use our data, our modeling to be able to price that so that those providers can have a return, and our corporate clients as well as consumer clients can have insured on the properties they have. I think there's a challenge here. That's what we're doing, figuring out the losses and helping to bring those two components together, pricing that risk.
Edwin, we talked about climate change as one of the risks. You're also operating in other areas. I know that you mentioned cyber and AI being other risks as well. Can you talk a little bit about those? Yeah, well, even stepping back from climate, that's one of what I would call 4 megatrends. The other 4, and one of them is in the area you're talking about, is technology. The other, so weather or climate, the workforce, so our people, we did a study that said 66% of the folks are expected to change jobs this year. We don't have to talk about workforce, but trade and technology are the other 2. And the 2 that you just mentioned, AI and cyber, is a big one in technology. The average cyber event are costing corporations over $4.5 million right now. And with the proliferation of data, the need to be able to store it, the need to be able to keep it secure, this is becoming an increasing risk for corporations. Obviously, it's an opportunity. You can drive productivity, you can drive revenue and growth, but it's also a risk. And so you called us a brokerage company. Yes, we are brokering the placement of insurance with capital providers, but we're also advising and consulting and providing counsel. In fact, we're one of the highest fee-based insurance brokerage companies because of this advice and counsel. So AI and cyber we see as an increasingly growing category. It's growing faster. The prices maybe in cyber are coming down, but the amount of limit, the amount of exposure that companies have are increasing. Up. So we're seeing growth in that. Wow.
Well, so how specifically do you work with clients to adapt to these new risks that you speak of? We talk wildfire. Yeah. We have geopolitical risk as well. Yeah. Cyber risk, which you just mentioned. What specifically are you doing to adapt?
I love the question because you guys are hitting on each one. I'll give you an example to explain. You just said geopolitical. I think it's been reported on. Aon helped place over 4, I'll use Ukraine as an example. Obviously, the geopolitical risks going on there, the war, the tension, the tariffs. We did, I think, what was the first of its kind, help place $465 million of public and private insurance to come into that market to incentivize corporations to come in and build and help with the infrastructure as we look to recover on that. So that's what we're doing. We are sitting, what specifically are we doing? We're sitting between investors, because it's not just an insurance company underwriting. We're sitting between insurers, we're sitting with reinsurers. Insurers also want insurance because they don't want all of that risk on their balance sheet. And then we're sitting between the corporations and saying, here's the risk. It might be unique risk, it might be easily placed risk, but here's capital priced the right way based on the unique data that we have, given that we are the second largest brokerage firm here, one of the leading brokerage firms here. We place that, we provide the data and the modeling to help match those two. There's a saying we say at Aon that capital will not go where it's not priced correctly, where it can't be profitable. And so we play that role coming in place.
How about cat bonds? We talked about that earlier this week.
Yeah.
Can you talk a little bit about that business for you?
Yeah, I mean, cat bonds is a
catastrophic bonds for anyone
bonds, catastrophic bonds, driven by the Hurricane Andrew back in, years ago. It's a subsegment of what we call insurance-linked securities. So if you think about investors investing in the marketplace, they are often looking for uncorrelated risk, and insurance is a place where they can have that. The cat bonds, you're setting up a special vehicle in the center where investors can put in premium, insurance can pay them a coupon on that, and if the risk is reaches a specific parameter, it's paid out. That has just been growing. It's at its highest level right now. I think in 2023 it was up to $17 billion in new place risk. The overall outstanding is at its highest level as well, and we are the leading. Aon is the leading brokerage placing cat bonds in the market right now.
Edmund, we only have about 30 seconds left here, and I was talking with a member of our insurance coverage team and said that a different insurance broker recently said this is as risky as the world has ever been, with increased geopolitical and cyber risk at the forefront. We've only got about 25 seconds. How would you say this world is when it comes, on a scale of 1 to 10 in terms of risk?
Risk is only increasing, which means the demand for our products and services is increasing. We take it very seriously, our position to be able to help put capital next to that risk as well, because we got to help our corporations.
It's our new world order. Happy Friday, everybody.
Thank you for the time, Tim, Carol, Nina.
A pleasure. Nina Trentman, of course, Senior Editor of Bloomberg News. Edmund Reese, he's the Chief Financial Officer of Aon. Be sure to check out the Bloomberg CFO Briefing newsletter this weekend.
This is the Bloomberg Businessweek podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
As you know by now, the Supreme Court has ended TikTok's 9-month legal battle, forcing leaders both within the company and in Beijing to consider a dwindling set of alternatives for keeping the video sharing app alive. Are you okay with that? Are you gonna what's gonna happen?
I'm not a TikToker. I never was on Facebook. Although now I feel like I'm ahead of the crowd.
It won't be an issue for Carol.
No, I'm going to be okay. I actually put my phone down over the weekend. I'm good with that.
You are good with that.
Yeah.
My phone's attached to me. It's not a good thing. TikTok's Chinese owner ByteDance can agree to sell the app's U.S. operations or wait to see if President-elect Donald Trump makes good on his promise to orchestrate a solution. For more, we bring in Rachel Tipograph, founder and CEO of the e-commerce and analytics platform McMac. The McMac retailer network includes Amazon, Instacart, Macy's, DoorDash, Uber Eats, and more. Rachel joins us from New York. Rachel, good to see you again. You've got amazing data on the McMac platform. Can you just explain for everybody listening who's not in this space exactly where your platform lies in the ecosystem of social media and e-commerce?
Absolutely. So McMac, we are a commerce enablement and analytics software company. We work with the biggest brands in the world, all the Fortune 1000 consumer brands, and they traffic us across all of their national digital media, their retail media, and their brand websites. As a result, in 2024, we were appended to $3 billion of global ad spend. So that's essentially the size of Walmart Connect's business. And 1.9 billion shoppers went through our system. So we sit at the intersection of media and commerce.
So if somebody...
when it comes to
Yeah, go ahead. Go ahead. Sorry.
Yeah, so when it comes to understanding where are brands investing their dollars in this very second, we can tell you exactly where they're investing their dollars across every single media platform and retailer around the world.
Wait, so help me understand. So Coty, Electrolux, Kellanova, Beckett, Ben Kaiser. I always screw that one up. Anyway, they come to you, and so you're giving them what information?
We're letting them understand when they're investing in a channel like Meta or TikTok or The Trade Desk or Snap or Pinterest, how it's impacting their performance of their biggest retail partners. Does $1 into Meta equal $1.50 at Walmart?
Okay, so needless to say, you've got some pretty good data about where money's going and what platforms these companies are using. Where does TikTok fall in your ecosystem. Who's spending money there, and how much money are they spending?
Yeah, so in 2024, on any given day, TikTok was our second most trafficked channel. So Meta represented 38% of our traffic. TikTok represented 36% of our traffic. So essentially, all advertisers that we were working with were investing in TikTok in some way, shape, or form. Alcohol brands in the US couldn't really invest in TikTok until October, but as soon as they allowed alcohol brands to start investing, they all went there. So it's pretty much a household name within the media investment strategy of the biggest brands in the world. So the TikTok ban really puts a doozy in their media investment strategy. And in the first 17 days of January, we have seen a 21% decline in TikTok traffic. And we've seen massive increases in Alphabet, which is inclusive of Google Search, YouTube, DV360, as well as Pinterest. So what that says to me is that brands are looking for reach. That's why they're going to Alphabet. And they're looking for brand safety. That's why they're going to Pinterest. Big brands.
So Rachel, so big brands, they have alternatives, right? And they'll just shift their focus, right? They're going to obviously go for where they can get the most bang for their buck, but they can find some alternative to TikTok. But what about folks that are influencers who really make their money off of a platform? What does it mean for them? Can they so easily switch to another platform and do as well?
Yeah, so the people who are going to really hurt with the TikTok brand are the creators, per your point, and the small medium businesses. And so what's been happening over the last 2 weeks within the creator economy is they're using TikTok to tell everyone where to go find them on other platforms. One of the main platforms is YouTube. YouTube is amazing for creators to be able to monetize their traffic and their content in those environments. The small medium businesses are in a much tougher spot. TikTok, it was an amazing channel for them. It was the power of television with the backbone of direct response to advertising. And so they all were looking for an alternative to Meta because Meta became too damn expensive. Everyone was competing for the same eyeballs there. And so when it comes to the SMB businesses, my big bet is a company that maybe you guys have covered, maybe you haven't, but it's one to watch for, and it's called AppLovin. Yeah. I believe that many of the small, medium businesses are going to start shifting spend there.
But AppLovin is not a consumer-facing app, right?
AppLovin allows you to buy ad space across all other mobile apps. So think of it like the Trade Desk, but for mobile apps.
They're a publicly held company. They're up 4% today. It's about $122 billion company. I think we actually had the company's CEO when they went public, Carol.
I think so too.
A few years ago. We'll have to get back in touch with them. Rachel, appreciate that. I also wondering about YouTube, because YouTube, it's funny you say that YouTube is great for creators. YouTube was like the original place for creators. And then, people changed the way they even consumed content online with shorts, with vertical video. YouTube then has now YouTube Shorts. Instagram has Reels. Snap is certainly important with Snapchat. What do you see as the opportunity with YouTube Shorts? That one kind of gets lost in the conversation when you're talking about competitors to TikTok.
Yeah, no. So, YouTube Shorts, from an advertising standpoint, we've actually seen significant adoption. So very similar to Meta, essentially the ad buy that you do is called dual placement. It's one ad buy and it goes everywhere across the Meta network. YouTube is now a part of Google and that type of infrastructure where you can place your content in a lot of different places, gain scale really quickly. And YouTube Shorts has shown strong performance. So a lot of brands are planning to reallocate their dollars behind that type of format, as well as the rest of the Google network.
I'm wondering, Rachel, what you're hearing from your network about maybe what could possibly still happen for TikTok here in the United States. Frank McCourt was just on our air and was talking about he and a group of investors have been interested in buying TikTok, talking about without the algorithm, having his own tech stack, if you will. But I don't know, what are you hearing from, like I said, your network who understand this space, that what is TikTok without that algorithm?
Yeah. It's really no different than than Snap. Let's just say that. If the eyeballs are there and they can keep the engagement, then sure, they can capture brand advertising dollar. But the power of TikTok was the algorithm, right? It predicted if you were gay or if you were getting a divorce. Like, that's the magic of TikTok. And so
magic or terrifying, but go ahead.
Yeah, depends who you are.
Go ahead.
But so I think it begs the question, really, what is TikTok without that algorithm? That being said, I have to say that a lot of brands, I talked about a 21% decline in TikTok traffic. That means 79% of advertisers are still using the platform, waiting around. And, we have 2,000 customers at McMac. I've connected with many of them, so have my team. And verbatim, people say, we're going to keep investing here until we're told otherwise. So I do think that we're going to see a long tail of advertisers continue to participate in TikTok until someone really comes after that.
What do you mean by really comes after them?
Like they get some sort of cease and desist notice. Until then, they're going to continue to pummel dollars into that platform because it performs for them.
When you say they're using it for advertising, are they using it in the sense of they're buying ads directly through TikTok and TikTok gets that money, or they're using it to support influencers who are then creating video or content around those products? How are you seeing, or is it the TikTok shop? How does it manifest itself?
Yeah, I mean, all three avenues. People do all three. You're buying media directly through TikTok Business Manager. You're engaging directly with creators and essentially sponsoring their posts, and you're distributing your products on the marketplace that is TikTok Shop. So until someone comes after them and they feel like they get a legal letter, they'll continue to try to monetize that platform in all the different ways we just discussed until they're told otherwise.
Hey, I wonder, in the notes you shared with our team and our producer, Paul Brennan, you shared this statement: even though TikTok has had a meteoric rise for brand advertisers to drive awareness amongst consumers, Meta and Alphabet, as you've been talking about, paid search, remain the strongest channels to drive conversion sales. So having said that, does that mean Meta and Alphabet, it raises their leverage for those brands looking to advertise, but does it also potentially raise the attention on them because they become even more dominant? And I know we're moving into an administration where it's expected to be easier, perhaps, in terms of tech oversight, but I do think about those implications, and we have about 45 seconds.
Yeah, I mean, it's hard to say if Trump is gonna feel like these companies are too big and he needs to break them apart. It seems unlikely at this point. I think what's really interesting that we're seeing in the McMac traffic is that since Zuckerberg made his announcement last week of removing fact checking from the platform, we've actually seen a 10.5% decline in Meta traffic from big advertisers. It's another way of saying brands are feeling skittish around Meta right now because they're uncertain if it's an unsafe place for their brands. So Alphabet remains to be in an even stronger position because right now they're capturing share from TikTok and they're also capturing share from Meta.
That's fascinating. Great stuff. Thank you so much. Great perspective in terms of the TikTok news today. Rachel Tipograph, founder and CEO of the e-commerce and analytics platform. It is called McMac, joining us today in New York City.
This is the Bloomberg Business Week podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, everybody, just got about 19 minutes left in today's trading session. As you heard from Charlie and Bill Maloney, we've got a rally underway on the equity side of things, looking for some really strong gains, the strongest that we've seen in the S&P 500 since the election. You flip it on over, though, to something we're going to focus on right now because so much attention, and rightfully so, is what's going on in the Treasury.
Oh, I thought you were going to say Crocs.
No, Crocs.
Yeah, down 2.6%.
No.
No, we're not going to talk about Crocs until the close.
Okay.
Because
preview
that's a preview
alert.
Because when we talk to Katie Kaminsky, we talk about yields.
Yeah, and I mean, I think, we saw certainly a reset this week following the CPI print. Right now we've got a 10-year note with a yield of 4.61, 2-year note looking at the shorter end of the yield curve, 4.27. Nomura T. Rowe Price, though, seeing a chance of a 10-year Treasury yield rising to 6% this year. So I am curious what Katie has to say.
And Katie Kaminsky is Chief Research Strategist and Portfolio Manager at Alpha Simplex Group. She joins us from Cambridge,
Were you saying
Massachusetts.
whoa there, Katie? I was watching you in the
Almost.
The preview.
Yeah, because I was talking about Crocs. That's why she was saying
You probably could tell. Yeah. I mean, 6%, that's a magic number, but we have seen consistent short signals in fixed income. So this week was a little bit of a surprise, and I think a shift in sentiment.
We did see a pullback in yields. Carol mentioning where the 10-year is right now. We saw a pullback from what we saw earlier this week, Katie, especially when that softer than expected CPI came in. What do you think the high for the 10-year is this cycle?
Well, this is going to depend. I mean, it could be as high as what Nomura is saying, but I think it's really going to depend on those two forces. The longer term forces are concern over inflation and sort of economics conditions that are actually reasonable, that we don't need to necessarily cut rates. So that's really short fixed income. That's about higher yields. Whereas the shorter term pressure seems to be sort of, how does this new administration does this new administration want lower yields? And is there a lot of pressure to cut rates, which could give us higher rates on the long end if we expect inflation, and shorter rates on the short end, which is a more normal curve. But I think there's still definitely a lot of chance that you could have higher rates for longer, despite the optimism this week.
So, Katie, having said that, I mean, and I think it's fair, right? We've all been talking about it. Tim and I feel like almost everybody who comes in, whether they're a CEO or someone who's got to manage money, is that we're going to kind of have to wait and see what comes out of the Trump administration, the Trump White House, and what Congress does as well. Is there, I don't know, are you thinking that things settle down? Is it 4 months in? Is it 6 months in? Is it the end of the year that we'll have a better idea of kind of where things will really settle in terms of policy and what it means for financial markets and treasuries in particular?
Yeah, I think it's going to take time because, with the change in administration, clearly, what's that push-pull between the Fed and the administration? How does data continue to come out? And I think we're going to continue to be watching inflation data to see, at what range does that fear of inflation actually come to fruition or not? And I think, we just aren't really, I think a lot of people are concerned about deficit spending and spending in general and what is the consequences of that. So I think we'll keep looking at it for the next couple of months. So I do agree it could take quite a bit of time to figure that out.
So be patient, everybody. Strap yourself in, get a nice cup of coffee, and just kind of watch the show. Having said that, what are you thinking about kind of where the 10-year is maybe, I don't know, in the next month or so? Right now we're at, 461, but what are you thinking? Or is it even hard to pinpoint that?
Well, I'm thinking actually, I'm not surprised that we saw this, yields lower, because if you really look at the chart, yields have moved so much over the last few months. So you've seen much higher rates. So it was really sort of time for some relief and some respite for that particular trade. And I think that, it's going to be this push and pull of longer term. I think that higher rates definitely need to be sort of the steady state, but there's still some short-term repricing and also pressure on the Fed to cut rates, that, and even sort of trying to figure out what next week means, that is going to potentially get rates a little bit lower in the shorter term, especially if equities look good.
How do you think about the Trump economic team looking at rates? We know Trump loves looking at the stock market. He uses it as a barometer for his own success. He talks about when it goes up. I'm expecting lots of posts on social media to that end if that happens this year when he does take office. But what do we know about how he looks at the bond market?
Well, I mean, I think the key thing is lower rates is good for borrowing. It's good for loaning. It's pro-business, right? So I think there's this natural expectation that, if people are spending and the economy's good, things are good. And so I think that naturally suggests that there's going to be a lot of pressure on lower rates, regardless of whether or not the Fed agrees. And so I think that's where a policy mistake could occur, in that they cut rates too quickly and then inflation comes roaring in at a time where you really didn't think it would be there. That's kind of what happened to us in COVID, if you look back at it, right? Lots of spending, lots of movement, and then suddenly, wait a minute, inflation is actually coming. So I think that's my general view, is there's going to be a lot of pressure on lower rates to make the equity markets happy.
But what happens if policies don't necessarily align with that? And I guess that's what I'm getting at, is not necessarily bond vigilantes emerging, but the idea that, okay, if people are concerned about executive orders around immigration being inflationary, then does the president-elect go through with that?
Well, I mean, I think that, that's going to depend on how, there, I guess, is a difference between sort of the reality and what's been said. And I think that's what's hard right now, is we don't really know. But I think anything that would be destructive to the equity markets could potentially be more of a threat than a reality. And so I think that's something we're going to have to think about next year. And I think this idea of lower rates is clearly a simple way to sort of boost spending and sort of boost the equity market. So I'm not surprised if there's going to be a lot of pressure on that.
Hey, Katie, one last question here. I mean, so we've seen rates trend lower, and I understand where you're coming from based on, we've been so high, so maybe it makes sense to see some weaker yields here, or lower yields, I should say. But the dollar has moved up, and I'm trying to understand that disconnect, right? Dollar moves up on expectations of higher rates. So I don't know. How do you explain that?
Oh, I'm so glad you asked that, because the dollar has been the most exciting thing to kind of think about for us, in that we've seen the dollar trade has been the biggest and most resilient trade in the last few months. And what's really interesting is that the dollar really didn't waver much on Wednesday, which was an incredibly big day. And that's exactly what you're saying, is that monetary policy has been a big driver of the dollar strength. So sort of the Fed pulling back made the dollar much, much more stronger positioned.
Yeah.
But there's also the fact that the dollar could be linked to U.S. growth and the U.S. economy as a whole. And if that's what's driving the dollar over this longer time horizon, then that's actually suggests that this is a more sustainable trend.
That American exceptionalism, which I like to say a lot because everybody else does. Katie Kaminsky, have a great weekend. Appreciate it. Chief Research Strategist, Portfolio Manager over at Alpha Simplex Group, joining us from Cambridge, Massachusetts. This is Bloomberg.
This is the Bloomberg Business Week podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.